Hello and good day. Daily analysis of the silver symbol on February 9th. In the past week, the price experienced selling pressure. After liquidity was collected on the sell side, it reacted to the fair value gap area and the 20-period moving average. And ultimately, it closed within the range of the previous week's candle, which indicates a bullish bias in the market. It is predicted that the price will have positive momentum in the current week. If it closes above the level of the previous week's candle at 92.19.62, it could continue the trend. It could continue its upward trend, but if liquidity is held and your bias is collected and absorbed, and it closes below the previous week's candle, it could enter a bearish phase in the market. Now, with the daily time frame analysis of the silver symbol. Movement. We can see that after a setup, the price failed to stabilize below its previous swing low, and after that, it closed within the previous range, which is the current situation. If today's candle closes positively, it could form a morning star pattern, and currently, the price is moving upward and entering the daily order block zone. From this area, it could have a short-term correction downward. Generally, the formation of a morning star pattern indicates the end of a bearish trend and the start of a bullish trend in the market, especially if the price closes above the order block zone at the 93.36724 level. The price could continue its bullish trend and target higher levels. With the analysis of the 4-hour time frame for the silver symbol, we can see the price movement in the market, which after a short-term correction as predicted, entered the FVG zone. It then continued its downward trend, but failed to stabilize the price, and eventually, after a liquidity sweep, it reached the daily order block zone, which has been optimized for the 4-hour time frame. It reacted and re-entered the consolidation zone. Additionally, we can also clearly identify a distinct diamond pattern forming here in the market, where the price forms a higher high and a lower low, and ultimately, if the diamond forms within the range and the trend ends. A diamond pattern could be formed at the end of the downtrend, which could lead the price to move downward. It could enter an FVG zone and get rejected upward from this area. Or, if selling pressure increases, the price could enter a candle order block zone and form a pin bar candle. In this section, at the support level after the downtrend, we can use this opportunity to enter a buy position. Also, by analyzing the RSI indicator, we can see a positive divergence in the market where the price has formed a lower low, but on the RSI, a higher low is being formed. By analyzing the 1-hour time frame of the silver symbol, we can observe the price movement. After the 1-hour break of structure, which indicated confirmation of the bearish trend in the market, the price failed to hold, and we encountered a false breakout, causing the price to react to the order block area and re-enter the consolidation zone. After the start of the bullish trend, there was not enough positive momentum, and ultimately, the bullish trend experienced a pullback. Following the break of a market structure level and a reaction to the 100 moving average, it is predicted that the price will move upward to collect the buy-side liquidity and eventually react to the unicorn zone at a certain level. After that, it is expected to enter a bearish phase. Our first area for entering a buy position is in the CP zone at the 75-point level, up to the 71-point zone, which are considered as price reaction zones. If we identify weakness in the bearish trend, we can use this opportunity to enter a buy position. However, if selling pressure increases, the price could reach lower levels, down to the bullish order block zone at the 70-point, 65, 71, and 64-point levels. Set your target so that if weakness is identified in the trend and the key level or market structure shift is broken, we can enter a buy position in the market. We can strategically set our specific trade target right at the major swing point, or perhaps within the market's deeper liquidity zones. If we are looking for the market to finally exit this current downtrend and begin to move steadily toward its previous all-time high, ATH, then we must consider The 92.0 point level needs to close above, and the price must stabilize above this level. A change of character occurs in the market, which marks the shift from a bearish to a bullish phase. After that, the price can continue its bullish trend toward its all-time high. Also, there is a liquidity grab toward the sell side in this area, along with a daily gap that may be filled at the start of the day or on Monday. Regarding this gap that has formed, the price could move downward to fill the gap area, and ultimately, by collecting liquidity on the sell side, gather enough liquidity for the market to turn bullish. By analyzing the 15-minute time frame for the silver symbol, we can see the price movement during the Asian session, which was an accumulation move. During the London session, a manipulation move is forming. If liquidity is collected on the buy side, it could react to the unicorn zone. After that, it could enter a bearish phase to eventually fill the gap area and, by collecting liquidity, continue its move. The order block zone is at level 72.8821, and from this break, at the 67 level, during the bearish move, we can enter a buy position targeting the swing highs in the market. And with the RSI indicator, we see a negative divergence in the market. We see that the price is forming higher highs, but the RSI is forming lower highs. We can use this as a confirmation for a trend reversal from bullish to bearish. Wishing you success and profits.